Hello, welcome to a new monthly program on AccountingWEB, where we're just going to chat through with Amy Chin, previous tax editor of AccountingWEB, some of the things that have been making people talk in the tax world over the last month or so. Amy, the first one we're going to talk about is a perfect example, really, of where in our profession, the idea of news can come up 3 or 4 times. It's news at first because we first hear about it, then it's going to be round the corner. I think finally on this one, it's because it's about to be happening. We're talking here about the cash basis, and it's just round the corner.
Yes, true. So, as you say, this has been on the radar for quite a while. But finally, from the current tax year that we're in, so ending April 2025, the default method for filing tax returns is going to change from the accruals basis to the cash basis. So we've been expecting this for a while, and hopefully accountants have been kind of preparing for this and getting ready and helping clients make decisions about whether to make the switch. So you don't have to switch. If you're using the accruals method to file your tax returns, you can carry on doing that. All you need to do is opt out, as the revenue are calling it, i.e. just tick a box to say, I'm going to continue using the accruals basis.
And some people might be watching this and thinking, well, hang on, I'm sure my clients are already on the cash basis. The point here is that it's the threshold has gone, the 150,000 threshold. That's what's gone. So now anybody can do it.
Yeah, absolutely. So they've taken out that threshold. Before, it was anybody with turnover under 150,000 could opt to use the cash basis, and everybody with turnover above that had to use the accruals basis. Now anybody can use cash accounting. And if you want to continue with traditional accruals, you have to opt out every single year as well, not just it's not just a one-off. You're going to have to make that choice every year.
So that probably leads me to the obvious question, which is, can I chop and change? I guess I can chop and change between cash and accruals year after year, but I would have thought the transitions between the two mean that the vast majority of people will pick one of them and stick to it.
I think absolutely, yeah. And there are certain transitional provisions in place for switching between the cash and accruals basis. Obviously, the revenue want to avoid giving things like double tax relief. If a client was using the cash basis one year and accounted for an expense because they paid it, and then they switch to the accruals method and they recognise that expense again in the year it relates to, when you're switching between methods. So just for that reason alone, it's just going to be too much of a faff, I think, for most people. And as you say, they're going to pick one and stick with it.
And of course, the problem here is that we know why the revenue are doing this. We'll talk about that in a moment, though technically I should point out the revenue denies that's why they're doing it. But as accountants, you and I are both accountants, we know that matching is right in life generally. Surely the cash basis is just going to produce less useful figures for anybody who moves across to the cash basis.
Switching to the cash basis will lead, in a lot of cases, to very volatile tax liabilities, which in a lot of cases that people are saying, certainly a lot of the comments on AccountingWEB are from people saying, the client's going to blame me. They're not going to understand why suddenly their tax liability is massive in one year and much smaller in the next year, and their profit isn't necessarily making as much sense in relation to their actual trade, and it will fall back on the accountant to explain why that is.
People will obviously say, I'm sure there's some huge tax dodgers to be won here. The answer is going to be, there are probably a few, but not many and not that often.
There are potential planning points, yes. Opportunities to manipulate payments or receipts or one-off events. If you had a massive capital gain coming, you might decide to delay that into a year where you can keep it below the 40%, 45% rate. But these are all kind of one-off opportunities. But yeah, you're right. These are few and far between. They won't relate to everybody.
I always find when anybody starts to think about their clients and dealing with the cash basis, suddenly every client you've got is a bridge builder with a 5-year project. The truth of the matter actually is that for the vast majority of people, take your average plasterer who's doing plastering work out the back of their own car, the difference between cash and accruals is going to be really quite small for the majority.
No, this is true. I suppose I'm coming from a background of exam teaching, financial reporting, tuition, and yeah, we deal a lot in exams with 5-year bridge building contracts. And this is where the cash basis really won't make a lot of sense at all and will cause really volatile profits and therefore tax liabilities, where you might have 4 years of losses and then a huge profit in the 5th year, which could then lead to far greater taxation if you're pushing above thresholds in that final year when you receive the income. But you're right, the majority of businesses we're talking about will just be kind of doing a job, receiving the money, shelling out the costs, and there won't actually be that much of a difference. And actually, the whole point the revenue is trying to make here is that it will, for the majority of businesses, likely be a lot simpler to prepare accounts under the cash basis. They can just get the bank statements and prepare the accounts from those.
And of course, you've given the game away on that point, because the reason we're going to talk about this so much is because where else would the revenue like us to take bank statements and effectively send them across to HMRC? The answer is MTD. We are just around the corner now, and I start every conversation with all the people I meet about MTD in this way. So I'll ask you, it's definitely happening, right?
It's definitely happening. The revenue are set on that. How it goes remains to be seen. But I don't think we can keep up this hope, belief, claim that it's not going to happen, it's going to go away.
Obviously, we'll talk more about this as we move towards April 2026. But there are two fundamental parts to MTD. There is the quarterlies, and then there is whatever the end of year process is going to end up being. We still have some gaps in the detail on that. But fundamentally, let's focus on the quarterlies. It appears a lot of people out there are so cross about this that they're almost saying we refuse to get involved.
Absolutely. So the quarterlies is really what's causing the most upset at the moment from what I've seen in the accounting community. And a lot of people, as you say, are saying, okay, I'm going to throw all my toys out of the pram. I'm not going to do it. We've got a lot of people saying, right, that's it. I'm going to retire, which is fine. It's their prerogative. If they're nearing retirement age and they can't be bothered, fair enough. But we've also got a lot of people saying, right, well, I'm just going to file 0 submissions every quarter, and then I'm just going to keep doing what I normally do and just do it all at the year end. And what can the revenue do about it? And the answer really is, as far as we're aware, technically probably nothing. HMRC, as long as something's filed, it could be 0 submissions, it could be what other people are saying, which is any old rubbish. And really, there's not a lot they can do apart from it will probably annoy them. And my question there would be, what's the point? And we were just talking about the cash basis and being able to just kind of chuck the bank statements into a spreadsheet and that's done. And really, the quarterly submissions should just be that. It's not preparing 4 sets of accounts and then a 5th. It's preparing the bookkeeping gradually over the year.
And a point I think we should make here is that some clients, of course, will be incredibly computer literate, more literate than the accountant themselves. They'll be fine with this. They'll be able to do that work themselves, no problem whatsoever. There will be others at the other end which will require a lot of work, and I absolutely have sympathy for accountants with those people who will be in a position of they don't even have a computer. They don't, they currently keep a few post-it notes and that's about all they have for the accountant at the end of the year. That is going to be difficult. That's going to be a retraining exercise in a big way. But the majority of people will sit somewhere between the two, and those people will have some ability to do some of this work themselves, perhaps keep records, at least some of the records themselves. And I think it's worth pointing out that actually there's nothing in the rules that say if you have an accountant that the accountant has to be involved in the quarterly process. You could let the client do this themselves.
Yeah, that's true. It just forces them to sit down, those clients to sit down 4 times per year and record their transactions, which should eventually, once, everybody's got used to the slight change in the way that they work and when they do things, it should lead to a smoother process during the year and certainly at the end of the year, if that basic bookkeeping has been done regularly throughout the year rather than this massive scrabble to get everyone done at the year end.
And even if you're not planning to use the cash basis for the final production of the calculation, there's nothing to stop you doing the quarterlies using the cash basis, is there?
Exactly, and that's what accountants do at the year end anyway. So that's not even a big change for most clients. They would just be, you're just taking out that basic bookkeeping.
But I guess if our conclusion is this is definitely going to happen, I think probably it's now time for us to say, look, start getting ready, and it's time to crack on with it.
Absolutely. And that's the message that Rebecca Bennyworth has been sharing as much as she possibly can. And a lot of comments, a lot of people out there on AccountingWEB and on other forums are really laying into Rebecca at the moment. I think she's become somewhat of a face of MTD in the community. And Rebecca's point is, as I said earlier, this is coming, this is happening. And in the past, HMRC and the government have introduced systems and changes without involving the people on the ground who it affects, and without taking advice and perhaps testing it as robustly as they could have done. And this is a situation where they are taking advice, they are speaking to people like Rebecca Bennyworth, anybody who is prepared to engage. And surely that's only a good thing if there are people on the ground testing the system.
And it's so rare I get the opportunity to use this phrase, I'm going to take it. Friend of the programme, Rebecca Bennyworth, and she is most certainly a friend of the programme, has done wonderful work here in MTD. And some of the abuse she's getting online is just utterly misplaced. Rebecca is putting her head above the parapet to help us, to make sure it's safer for us to follow. And therefore she should be thanked, not given some of the grief that she seems to be getting. But I think she would say, not that I should speak for her, but I think she would say one of the problems we have with this is that people are focusing on these extreme views of MTD, where we need to start to look that actually it's all going to end up somewhere in the middle.
Absolutely. But the time is now to get prepared.
Amy, thanks very much. Until next time, bye-bye for now.